Glad to have you here with us as we continue this Tuesday morning here on Let's Chat. Final day of the month, and as promised, we have our money man, Chris Hopkins from Apogee Wealth Partners here, trying to break some sense out of all of this ups and downs we're seeing about oil, gas, diesel, and more. First of all, Chris, thanks for your time.
Good morning.
Oil now extremely high.
Right.
Gas now extremely high. Diesel fuel even higher.
Right.
What's the outlook?
So the outlook is dependent upon the end of hostilities in Iran. I mean, it's that simple, right? The Strait of Hormuz, which is the waterway, has effectively been closed, and that's 20% of the world's oil supply passes through that gap. And Iran has essentially closed the strait. So we're trying to reroute oil around it. We've been drawing down on supplies, but now we're approaching shortage territory. So
Right.
globally, our supply is down about 10% net.
And
So
the
that
prices
prices
are up by how many percent?
So oil prices as of this morning are up about 90% since the war started.
Right.
Gasoline is up by more than $1. We hit $4 on average nationwide. We're a little cheaper here, but the outlook is really very dependent on how long hostilities last. And if hostilities are terminated and supplies begin to return to normal, we would expect probably a 3 to 4 month transition for supplies to return to somewhat more like normal.
And this is going to cost millions of Americans a lot of money in the meantime, especially those who use diesel fuel. It's what, $5.50 a gallon?
Right, highest on record now.
Ever.
Ever in terms of diesel fuel. And that impacts so many places. I mean, we think about truckers, obviously, who are struggling. We're already struggling a little bit because freight rates were down.
Right.
Now you've got transportation costs up. Think about Uber drivers who are spending $50, $60 more a month or a week on fuel.
Right.
But even indirectly, you think about things like fertilizer, which is made from natural gas.
I had not thought of that.
Right, and a big percentage of that passes through the Strait of Hormuz from the Middle East where it's manufactured. So farmers are feeling the brunt of higher costs for fertilizer and higher costs for diesel fuel to run their tractors and to transport their products to market. So it blows through the entire economy.
It's a true domino effect.
It really is.
And you were telling me just before airtime, we're going to see, as a result of this, believe it or not, or we could, a helium shortage.
Sure. So your kids
Why?
won't get to have a party balloon. Now, actually, the commercial use of helium is very important to the manufacture of microchips. Liquid helium is a great heat conductor, and it's used to cool components
Right.
rapidly and safely. So the microchip industry depends heavily upon the supply of helium, which is a byproduct of natural gas, and again, a big percentage of it comes from the Middle East.
So we could see a really insane jump in helium prices.
That's
as
right,
well.
which will blow through into the chip manufacturing, which is experiencing a real boom right now because of AI. So all the costs go up across the whole board.
And you know as well as I do, once those costs go up, do they rarely get back down to where they were before they started escalating higher again?
Exactly.
I want to talk to you about Bitcoin for a moment. It's been a long time since we had this discussion. Where do we stand on Bitcoin now? And what would have happened if we had put $1,000 into Bitcoin
Sure.
10 years ago or whenever at its inception?
So just to give you some context, in 2015, Bitcoin was $380 for one Bitcoin.
Right.
In 2025, it went up to about $130. So if you invested $1,000 in 2015, in 2025 you would have had $333,000 from 1,000.
Wow.
Now, had you invested now with this chart shows the price a week ago when we made it, Bitcoin is down even more today, so that number from 333 would have fallen to about 170,000. Bitcoin's down about 40% since last year. And the key there is that it's very volatile. It's up and down all the time.
Why?
Because it's a speculative asset. People are betting on Bitcoin. It's not really a practical currency. You can't really use it to transact. You can't go down to Publix and buy a loaf of bread with it.
Right.
People are buying it as a speculative asset, expecting the price to go up. But it also trades in lockstep nearly with the stock market. It's very highly correlated to tech stocks like the chip stocks. So as the market sold off in the Magnificent Seven, the chip stocks and Microsoft and all the AI companies, Bitcoin sold off along with it because it's not a store of value. it really is, as I said, a speculative asset.
But still, on a percentage basis, if you were to put that money in back years ago when Bitcoin first took off, even though it's lost a bunch today,
that's right.
What kind of percentage would you still be seeing
Yeah,
on a return?
we could work out the annual percentage rate. It certainly would have outperformed the S&P 500, no question about that.
Right.
But you would have had a much rockier ride up and down, and who knows? The answer is, in terms of, can this ever be a currency? I don't think so, because governments lose control of it.
And Bitcoin could go away just as easy as it made its way onto the
Certainly
landscape.
could.
Chris Hopkins,
Yep, good to see you.
Thank you so much.
Thank
you can
you.
get in touch with Chris at Apogee Wealth Partners right here in Chattanooga. Apogee Wealth Partners, and our quick look at our question of the day. Have you done your taxes yet? Yes. Not yet. That time already. You see the rest. Put your phone over the QR code. Let us know what you think, and we're back with more of Let's Chat after this.